that. I don't think they should have. But what I'm here to do is I'm here to rescue you. I'm a 30-year veteran trader, Mario Marciano, and I'm telling you that this is a full-fledged reversal on the S&P. And I'm also going to tell you, I don't have a lot of time to go through it on the tape, but you can follow it. Same thing here. This is the beginning of the full-fledged reversal. And we are starting to break below some key levels here on this NASDAQ 100. The 200-week moving average, which used to be resistance, and we broke above it. And we are flirting with this disaster. And part of our market forecast, and you can learn more about that, and if I were you, I would. Because the NASDAQ comp has no support until it comes back to 1,700. Our target is 1,700 in the short term. That means that this is the top. That's that support level. That means that that's the first area. Our second area that we see where the NASDAQ comp is going to come back to, and it's a weekly chart, is that potentially we're going to come by the year end, by the havoc that's going on in government and policies, is that this whole move is at jeopardy of unwinding and going down. And we're here to tell you by the end of the year, we could get all the way back down here where this little V shape was and come all the way back down here and test that. That's how Wall Street works. That's how these depressionary, big sell-offs, all of the problems we've had over the last couple of years, you get this one big move one time, then the party's over, and then the party starts like this again. Let's not be illusioned. The party goes down like that. Starts over there, goes down. We're starting right here at a major technical area on the NASDAQ, which basically, once this is where the NASDAQ broke down. A lot of selling down here to these lows. And we rewound the tape. That's all Wall Street did, was rewound it, got people sucked in. If you're holding your IRAs and you're holding other mutual funds or asset investments, I suggest that you go to cash. And if you don't, you will pay a price. That's why we're recording it. We've given you the opportunity. If you see the video, tell your friends, come visit our website. Do whatever you want. If you don't believe it, then guess what? In the summertime when inflation gets out of control and the NASDAQ comp is way back down here, given all its moves up, in 2011, 2012 was worse. 2011, by the mid-year of 2011, we could be at 500 on the S&P. That's a long ways down off the cliff. That means that quarter after quarter after quarter, based on high unemployment rate, based on different regions of the U.S. of where that is working, that temporary unemployment is going to come off. The consumer has to save their money because they don't know if they can pay their bill tomorrow. And the thing about it is, folks, the good news is you can make money when the market falls all the way back down here. And potentially that's the lower end of the support by year end. And you can make a lot of money when it falls. You can get on the other side of all of it. So if you didn't make all the money, you could have made all that money when the markets went down over here. There's nothing that says that right now that you can't get started today, and that right now you as a person cannot be in our, you can be in our SMF Pro Trading School. We have one. It's a year long. You would be in this live trading room every day just like this with SMF certified instructors. This is what's going on. It's not too late for you to either get out of the market or participate in a professional training program where you can be guided through the market. That's the indexes that I've showed you. And the S&P 500 is heavily related. The financials and the transports led it up, but we're breaking down. And we broke this major support level here right at around 1090 on the S&P. Right now the S&P is 3 handles at 1087, below that 1090. We got an FOMC meeting. Mr. Bernanke will be out with monetary policy. I don't expect a rate increase. Can they take liquidity out of the system that drove it higher right now? My view, they're in a hard spot. They can't. But then again, what's going to happen is in June of 2010, you're going to have to deal with the super highway to inflation. Because the problem is the amount of stimulus is, where the deficit is, and everything of it is that all of these gains, if you go back to 1800 and you go back and look at all the various different bear markets that we've had in our history, none of them have ever made it off of these systemic risks. Yeah, you get the big moves, but eventually it's all eaten up by inflation. And the problem of it is we have a 2010 January top. It's a reversal. This is the third week, folks. And the trend is officially right now broke. Why? Let's answer why. You're below the 10-week moving average. 10-week moving average is not going up with the trend. It's flattening out. It's going to turn. If we close 4 weeks below it, that will confirm that that yearly top is in. You've been given a gift. www.stockmarketfunny.com. Call us today, 702-685-0772. Enter our SMF Pro Trading School. Sign up for some mentoring and coaching if you need it. You're not going to be able to understand all of this, even by listening to the tape. But you can understand one thing. You can make a fortune off of the reversal and it going all the way back down over several, many more months. That you can understand. And the AIG hearings are going on right now with Geithner, Paulson, why they did not let AIG fail like they should have. You can also put the health care reform bill, which is a disaster, in there. You could put the Obama deal, Obama, what do you want to call it? Obama economics or whatever, which are a failure. They're not being done the right way. You can't jumpstart America, and you can't jumpstart small businesses and the consumer with the kind of action that we have seen over the past couple of weeks. Starting 2010 out in a very negative way.